Well, good afternoon, everyone. Welcome to Stock Market Today. My name is Ken Shreve, joined today by our esteemed news editor, Ed Carson. On today's show, of course, we'll take a look at a pretty bullish day for the stock market. Not much volume behind the gains today. Looks like volume is going to come in a lot lower than what we saw Thursday, but take a look at a pretty strong end to the week as the Nasdaq finds support at its 50-day moving average. And Ed, I know that you always assemble three stocks to watch. What are the stocks that you picked for us today?
I want to take a look at Facebook, Goldman Sachs, and DocuSign, all sort of setting up, but we'll just have to see how the next week goes.
Okay, very good. Well, I know on Fridays, this is a little bit of a longer video. I know we start by taking a look at the Nasdaq daily chart and weekly chart on TD Ameritrade's Thinkorswim platform. So, Ed, on Thursday, the Nasdaq came down to its 50-day moving average, pretty much closed right there, but we had a nice bounce off the line today.
Yeah, that was nice action. I mean, the volume, as you point out, wasn't the greatest, but this is sort of where you might expect the Nasdaq and the major indexes sort of all found support around the 50-day line. Good bounce, sort of, after coming down for a couple of weeks, and it just, guess what? Do you want to know why stocks have been struggling? Your stocks have been struggling. Well, the market has been coming down, especially the growth names, for a couple of weeks. And that masked some of the rotation that you haven't seen. There's some more violent action, but yeah, found support where you'd like it to. It wouldn't be the worst if it went sideways from here, but I don't think anybody would be crying if we ran up to new highs either.
Yeah, well, we should say that the Nasdaq did end with a gain of 1.2% today. We've been talking about pretty weak breadth on the Nasdaq for some time now. Breadth was a little better today at last check, a little better than 2-to-1 on the Nasdaq and on the NYSE. So we'll swing over and take a look at a weekly chart for the Nasdaq now on Thinkorswim. See what that looks like, and down for the week, but a nice stand at the 10-week moving average here.
Yeah, exactly. Not bad at all. You can see how we closed near the weekly highs. So second, it all now looks a little bit more calm. So that on the weekly closes, not too much change over the last few weeks. Ultimately, finding support where you'd like to, and it's just not that dramatic. Nice to see those bounces. Maybe there were a few buying opportunities today. A little bit more strength, and maybe we'll see some more in the coming days.
It was great to have Charles Harris on IBD Live this morning. He is a portfolio manager for O'Neill Global Advisors, and he kind of reminded us that the market is in a confirmed uptrend, and it's easy to get kind of bogged down by a lot of negative headlines, whether it's the spread of the Delta variant or when the Fed stops or starts their tapering of their monthly asset purchases. Is this going to result in a spike in interest rates? But, just looking at the technical picture of the Nasdaq here, I mean, we still have to respect this confirmed uptrend.
Yeah, I think we all can get caught up in what's happening this minute, that hour, this day, or even that week. Looking back, it's still in pretty good shape.
Okay, well, I guess we can now swing over to MarketSmith and take a look at the S&P 500, which lagged the Nasdaq a little bit, but still closed up near its high and ended with a gain of 0.8%. You can see it came close to the 50-day moving average. Didn't quite touch the line on Thursday, but ended with a nice gain and lower volume today.
Yeah, and so while this one also fell for the week, not that much. Again, found support at around the 50-day line, basically at the 10-week line, back above the 21-day. And that's with energy stocks doing poorly. There was a lot of the big cap tech names really some of them had a really good week. Microsoft, Adobe, there were some big cap names, NVIDIA, that really did it. So that's, it really helped the S&P when you might think some of the sectors that are in it did not have good weeks. But this is all about the whole broad diversified portfolio. Sometimes that works out pretty well.
Yep, definitely. And then why don't we take a quick look at the Dow, which also had a good day, lagged the S&P 500 up about, 0.6%, 0.7%. It touched the 50-day moving average Thursday, closed lower, but up near its session high Thursday, and had a nice day today.
Yeah, and pretty much like the S&P, just not quite as strong.
Small caps, the IWM, looks like we might have gotten, a nice close above the 200-day moving average. This has clearly been the leading index. Russell 2000 at last check outperformed today, up around 1.5%, maybe 1.5, 1.6%, and still kind of a troubled index here in a downtrend.
Yeah, and this is sort of a reflection of market breadth. I mean, just looking at it, this is where, if you look at the advanced decline line, it's been hitting 2021 lows. This was basically at, getting to the lowest levels since January, essentially. It's above the 200-day, which is nice, but it's definitely been weak. It was a bad week. Not it's how it's clearly the 50-day line is resistance, and that's still a long way away.
Right. So some of us on IBD Live, which we air every morning starting at 6:20 a.m. Pacific time, we've been talking about kind of scaling back a little bit, raising some cash. Was today's session enough to make you think that, well, maybe we should start wading back into the market here and gaining more aggressive exposure? Where are we at in terms of screens and buy opportunities at this point?
Yeah, well, one of the things is just sort of like, especially if you've been paring back, that provides some capital. Say, like, it's not necessarily a time to greatly increase your exposure yet, but if you're cutting other things and then you see something that looks really attractive, you can, nibble on that. There's definitely been a few buying opportunities. I know that, Leaderboard and Swing Trader added some positions or, bulked up because there were some buying signals out there today.
And of course, Ed, next week we've got the Jackson Hole Economic Symposium where Jerome Powell will be speaking. Again, we saw the release of the Fed minutes earlier this week. Are you expecting anything significant out of Jackson Hole in terms of more specifics about when the taper is going to start?
I mean, he certainly could. That's one of the questions. The questions were like the Fed minutes. This was the Jackson Hole speech. He could just sort of mumble along and say, like, wink, wink, and here's the September meeting, and lay it out there. But it does seem like we're going to have a taper. That obviously was among the pressures affecting the market. The fact that we're going to be pulling back in conjunction with some weak economic data, not all of it, but some of it was weak in the US and some weak China data. So those raised growth concerns. But ultimately, we'll just have to see if the market can take that in stride after that initial bump.
Yeah, one reason the market got a little bit jittery earlier in the week was that there were several committee members that supported a start to the tapering before the end of this year. There are still, committee members that want to wait until the early part of 2022, but we'll just have to wait and see. We'll get more color, maybe from Jackson Hole, and then the next Fed meeting, I think, is in the third week of September 20th, I think, a 2-day meeting. So that should come into more focus as we move forward. Okay, well, is it time to look at some individual stocks here? Ed, you want to start by taking a look at Facebook, ticker FB, which is still in a nice uptrend here and respecting its 50-day moving average.
Yeah, I mean, it's hit the 50-day line a couple of times, and on the 10-week line, maybe 3 times. So it doesn't feel like it's a great time. I mean, you could buy it off the 50-day line. To me, I would not, but it's 4 weeks into a consolidation, so it could have a flat base, in another week. And I think you could probably do something like draw a trend line like here, or just use this as an early entry, maybe early or partial entry, and then, and add it that way. This has been doing very well. It's had very strong growth. It's not just a slow, pokey stock. This is tremendous growth. I mean, it's going to slow, but that's amazing growth for a $8 trillion company.
Yeah, I mean, a big reason why the Nasdaq has been able to hold near highs is not so much because top-rated growth stocks have been just breaking out left and right, but these large cap technology stocks like Facebook and Microsoft that you mentioned, Apple, Google, all these large cap techs just propping up the Nasdaq here.
That's right.
Okay, moving on to the financial sector, we'll take a look at Goldman Sachs. A lot of financial stocks have come under pressure. We were talking about Wells Fargo earlier today on Leaderboard, but this looks just like a nice retest of a prior buy area here for Goldman Sachs.
Yeah, I mean, it sort of ran up really strong volume, then came down in lighter volume. So that's a positive. Look, it's no fun. And this is why we talk about buying it right by the buy point, or even could have bought it like even below the buy point as it cleared this entry, around here. But that way, you're not pulling a loss, or a big loss because a lot of stocks do pull back. And especially in this kind of choppy market, it's not surprising. Treasury yields. Goldman is less exposed to the interest rates, but still, the interest rates and economic growth, it's still pivotal. So concerns about that weighed on financials. But yeah, this is exactly, this is where you wanted to find support, the old buy point in the 21-day line. So it's still actionable here, especially if it shows a little bit more strength. And it'd be nice to see that breadth, because the breadth was widening out a couple of weeks ago, then it sort of tightened in, which was a little worrisome. So it'd be nice if we could widen out again and add more names.
Yeah, technical analysis is intimidating to a lot of people, but we it really doesn't have to be too complicated. You mentioned this, really heavy volume breakout. We're in the summer doldrums, so we've seen a lot of breakouts happening in light volume, but you can see how volume really came into Goldman Sachs at the initial breakout here, and then you get a pullback in light volume. If you get a pullback and you see a lot of erratic price swings and volatile price action, that's typically not a good sign after a breakout. But Goldman Sachs did the exact opposite. Heavy volume breakout, low volume pullback. Technically, this stock looks very healthy as it test supported its 21-day moving average here. So Goldman Sachs, even though volume was light today, nibbling at the stock here doesn't seem like a bad idea.
Yeah.
Okay, moving on. Let's, actually, can you pull up the 10-year Treasury yield? Because that's 0.0 TNX while we're talking about Goldman Sachs. Yeah, so the 10-year yield was up a little bit today, helping the financials. Looks like it was up about 2 basis points. Amazing how that 10-year yield went right up to its 50-day moving average around 1.38% and got turned away. You have to wonder now if it's going to, be able to poke through that 200-day line and get to the 50-day again, but that does look like a pretty significant resistance level.
Yeah, and that's important for banks, and it just Goldman a little less so, but it still matters. And and this has also been helping. The downdraft has been helping growth stocks at various times. And there's one reason why the Nasdaq probably came under some pressure was, and the highly valued ones, was because the 10-year yield was rising.
Yeah. Yep. All right. Well, finally, let's take a look at DocuSign. Definitely an institutional quality stock in the market here. This is a stock that's I know a lot of longs were hoping for a better bounce off the 50-day moving average at this point. DocuSign did not participate with the Nasdaq today, closed near its low. Not a broken stock by any means, but we're still waiting for a good solid test of the 50-day moving average to play out here.
Yeah, I mean, for those who bought like early on earnings, like as it cleared here or through a downtrend, like a little bit above the 200-day line, you're fine. You're fine.
Yeah.
Everything's great. That's one of the nice things about buying early, get that thing. But yeah, since it's hit the buy point, it's had these head fakes. And yeah, a few weeks ago, the Nasdaq was doing this choppy action, and that was doing a lot of head fakes, especially with some of these software names. And some of them did better, some of them did worse, but it was not fun. If it could move higher from the 50-day line, there'd be it's like all the grand connection of all buy signals. It goes through here, it's going to retake the buy point, it's going to get above the 21-day line, it's going to even break a trend line. That doesn't mean it works though, but there'd be a lot of technical signals there just to make it complicated, because you were trying to make it too simple earlier there, Ken. So, but it would be a bounce from the 50-day line and retaking the buy point. That's pretty simple. The one thing I would worry about is the earnings are coming up in a couple of weeks. There's still time, but it's just something you keep a watch on, especially as that gets closer.
Yeah, and these high multiple stocks like DocuSign really are held to a high standard around earnings. I mean, the DocuSign has been selling at seemingly a triple-digit PE ratio for some time, but when you look at the annual earnings estimates and you look at the growth that the company is delivering in recent quarters, you can see that revenue growth down at the bottom there, 45, 53, 57, 58. So we will definitely see another quarter of strong growth, but it's going to have to be an outstanding earnings report to fuel additional price gains. So yeah, earnings coming up in 13 days, according to MarketSmith. All right, well, we're at the stage of the show now where it's sort of like, okay, what's the game plan for investors right now? We're in a confirmed uptrend. You still want to be going through your growth screens. It's certainly okay to buy stocks. I mean, you don't want to be starting with aggressive, lopsided early positions here, right?
Yeah, and I just want to bring back, it was a really good point. It was Charles Harris was absolutely right to talk about that. Actually, one of the reasons why he was bullish is because, a lot of other people have been getting bearish, or at least less bullish, not necessarily bearish, but less bullish. I just argue is that one thing is that you have to watch out for how are your stocks doing. And today, chances are your stocks are up. I mean, as you said, advancers led 2-1. So probably your portfolio saw some gains, but there was definitely some weakness. I mean, the market breadth and some of the narrowing leadership even if you're a really good stock picker, it hasn't been easy to make money, especially on those newer buys. So, you have to evaluate portfolio. There have been some trimming along the way, but that's not the worst thing, because now you might have an opportunity to take it to move into stocks that are on the upswing, assuming we have a continuation, going forward next week.
Well, Charles acknowledged that it's just not, the past couple of months, it's just has not been an easy environment to make money. He
Mhm.
he acknowledged himself that the portfolio has just kind of been spinning wheels and just kind of going up one day, down the next, and really not making much progress. So I know I'm in that boat. I'm sure you are too, and a lot of people tuning in right now are thinking, okay, good. Well, at least I'm not alone. So, but the point is just to stick with the routine, stick with the strategy, look for good pullbacks, look for tests of support. And I think bottom line is that Friday's bullish action, showed that we are still in a confirmed uptrend here. It doesn't really make sense to get too bearish on this
No.
market, but you have to be nimble and prepared for anything.
Yeah, I mean, go through your screens this weekend. The fact that all these indexes hit support levels, well, chances are a lot of stocks did too. So there might be a lot of these buying opportunities setting up. So hopefully there's a lot of that. But you also, as you say, you have to be nimble, have to be ready. If we roll over again, there's a lot of stocks that right now are setting up, but could quickly look damaged as well. So it's definitely one of those turning point kind of situations.
Okay, well, it looked like it was going to be a rough week for the stock market, but strong gains. Friday ended up being not such a bad week. So we'll see what the coming week holds. Ed, thanks very much for your perspective. We appreciate it. That will do it for today. Thanks very much for tuning in. We'll see you back here Monday for another SMT video. Have a great weekend, everybody.